With the euro having dropped 2% against the US dollar since the start of September, traders will have their eye on Lagarde and her team to see if they can produce a boost for the currency next week. Hello and welcome back to our channel. My name is Ella Hawthorne, and in today's video we are going to be previewing the European Central Bank meeting, which is happening next Thursday, and we'll be looking at the euro to see its performance against the US dollar and what we can potentially expect. But before we get into it, please like this video, comment if you have any questions or suggestions, turn on your notifications and subscribe to our channel. So as I was saying, the euro has dropped around 2% against the US dollar since the start of the month. A lot of that momentum actually coming from Thursday last week, which was the 31st of August, the last day of August. We saw that negative momentum come in, really turning the tide there. Since then, pretty much it's been a picture of negative candlesticks, downside momentum, attempted rebound on Monday, not really getting much out of it, and pretty much stuck in that downtrend pattern for the short term. Now, as I was saying, the ECB meeting is going to be the main event on the calendar next week for the pair. And it's a little bit uncertain right now as to what exactly is going to happen. I think we've got a similar scenario with other central banks around the world. But with the ECB specifically, in July, we saw Lagarde really switching off the autopilot and saying that the bank was now very data dependent. And as we all know, banks are always data dependent. But it's come to the point now where, and she said literally that you could both see a hike or a pause at the September meeting. Both are possible. It really is the case of what was the data going to say between that meeting in July and now in September. Now, if we're looking at the data, it's kind of painted a little bit of a picture of stagflation. Now, if we're looking at consumer confidence, it's dropped significantly. Consumer spending as well. Growth is stagnating. I mean, if we look at the latest GDP data actually that's come out this morning, it shows that quarter on quarter, the second quarter has seen a growth of just 0.1%. So yes, it is still growth, but it's still very, very lackluster growth. And it is showing that pattern of slowing in the economy. In the previous quarter, we actually saw no growth. So it's a little bit of an improvement, but especially considering the much better resilience that the economies around the world have shown in 2023, it is lackluster growth. And if you couple that, as I said, dropping confidence and also rising inflation, which picked up again in the last few months, we have this picture of a possible stagflation. And that essentially makes the meeting next week a very, very, very complicated. If we're looking at market pricing, we're seeing about 65% chance of no hike. That's what's being priced in by the market. As I said, pretty even split. Markets are still very confused as to what exactly is going to happen. There is those that believe there is a final rate hike in the works and that September will see another 25 basis point hike. And that will take the total hiking to 450 basis points for this hiking cycle. We've currently seen 425 in a little over a year since it started. Now, in terms of the reasonings why we may not see a rate hike, as I said, it's pretty much split at this point. In terms of no hike, I think sentiment indicators have really shown a negative picture of the economy, suggesting that the growth is losing steam and that we could be looking at a period of very, very little growth, even potentially a small recession coming. I mean, both households and corporate businesses are starting to reduce their activity. We're also looking at the service sector. The service sector has been one of the key drivers of growth in the Eurozone economy for the last few months. That has also started to show signs of contraction. So it's got to a point where it seems like growth is losing steam, confidence is losing steam, and therefore, given the amount of rate hikes we've seen so far, many may argue, and it's a valid argument, that this has come to the end of the hiking cycle. From here on out, keep rates unchanged, hold them for the foreseeable future. This does not mean cut rates anytime soon, but keep them where they are and see how the economy evolves. Now, on the other side, for reasons for a rate hike, reasons to see a final rate hike, again, inflation is one of the key sticking points for that. Inflation has ticked up once again. Inflation expectations are also high for the coming months, especially if you're looking at market projections. So that is essentially one of the main reasons to suggest that you may need another rate hike to kind of close out the hiking cycle, especially because the ECB has a sole mandate of inflation. As contrary or in contrast to the Federal Reserve, which has a double mandate of stable and high employment and stable inflation, the ECB focuses mostly on inflation. So given the way inflation has been tracking, given the expectations, it could be the case that they decide to hike one more time. Now, there is arguments that disinflation is gaining momentum and will continue to gain momentum in the next few months. But given how the ECB has been very data dependent on current data, they could be looking at the current readings, which actually show inflation potentially worsening or remaining elevated in the coming months. So essentially, that is the two arguments you have. And I said both of these arguments are pretty valid and both could be justified by the central bank. So it is a case of let's see what happens on Thursday. In terms of market position, as I said, so far a little bit more weight assigned to no hike. But I think either way, we could see some interesting market reactions on the back of this. Of course, a lot of it is going to do with the messaging from Lagarde and her team. As we know, even if we do see a rate pause, I highly doubt that Lagarde is going to be lenient and complacent and start to show signs of weakness. I think if she does pause rate hikes, she will be very, very hawkish with her messaging. And conversely, if she does deliver another rate hike, I think she will be quite soothing with her messaging to kind of show that this is potentially the last one and that from here on out, they're just going to monitor to make sure that growth doesn't get hindered too much in the process. So I think that's pretty much the preview of the ECB meeting. As I said, pretty hard meeting to preview. As we come to the end of the hiking cycle, I think that's always the most complicated times to try and determine what's going to happen because there is so many factors taken into account. And as I said, the data is starting to show a lot of weakness in the economy, but at the same time, inflation remains elevated. So we want to avoid a situation of stagflation. So what is the best course of action from here? Let's jump onto the chart now to see how euro-dollar has been performing. Okay, so here we have it, euro-dollar chart, Capital.com via trading view. As you can see here, the pair has been in a downward trend since the highs back in mid-July, and especially stuck within a descending channel since the end of July here, throughout most of August and now the start of September. As you can see here, Thursday's candlestick last week really cementing that bearish momentum there to the downside, taking place throughout the last week or so. Now, within this downtrend, this downward channel here, as you can see, a key area to look out for, especially for buyers trying to reverse the momentum here, is this mid-trend within the channel. This is a key area of resistance. It was throughout most of August here, as you can see, as those daily candlesticks were showing attempted reversal here from buyers. A lot of that resistance is coming to rest along that midline, currently at around 107.35. It's likely that we see a little bit of resistance between there and 107.80. Further beyond that, if we do manage to break above this area, the 200-day simple moving average will be up ahead, currently at 108.22. As we know, it is a key psychological area for resistance. We haven't actually been below this line since back here in November last year, so quite significant that it's dropped below it, but also seeing that the moving averages are pointing to the downside here. So short-term momentum continues to show some weakness, although we may see a little bit of a rebound in the coming days. Now, looking at the RSI, you can see here, currently heading towards that area of oversold, hovering around 32 right now. And the last few times we've been around this area back here in May and also in February, you can actually see that when we got close to this 32 line, we actually then started to see a reversal to the upside here, finding some momentum to push higher. So it may be the case that we are now at that area where some support from buyers is coming in, maybe a little bit of sideways consolidation before then moving to the upside. If this were the case, we do manage to see buyers coming in. As I said, watch out for that midline. Beyond that, the upper bound of that descending channel currently at around 108.80, looking to find some strong resistance there as well. So because of the current picture, as I said, the RSI pointing potentially at a little bit of a short-term rebound. The candlesticks also maybe suggesting that. Wednesday's candlestick here showing some indecision, potentially the start of that sideways consolidation. If this is the case, looking to break above the midline, then the 200-day simple moving average, heading towards the upper bound. Once we get there, expect to see some resistance. Unless we see a strong change in the fundamentals for this pair, the path of these resistance continues to be to the downside for now. So that is it for today's analysis of euro-dollar and previewing the European Central Bank meeting next week. Thank you so much for watching, and don't forget to subscribe to our channel.